Hello traders, Gary Wagner here, approximately 10 a.m. on Monday in Honolulu. It is the 23rd day of July, 2012, and this is the daily report for gold and silver. Following a pessimistic outlook on the Eurozone today, we saw strength in the dollar, and that strength in the dollar can easily be converted to weakness in the precious metals markets. We also saw weakness in the equities markets today. Now, well off of the lows, as you can see, we're looking at a 240-minute gold chart on the right. We had a low of 1562, a high of 1581, and as you can see, we're up near the highs, off about $6-7 on the day. Currently, we're trading around 77, 76, 78 in that area. As I said, putting it off about $6. Silver, as you can see, cash market up above, currently down about 29 cents. 2702's current print screen. We've got 2704, 2714 bid-ask spread with a low of 2659 and a high of 2730. There can be absolutely no doubt that this marketplace, both gold and silver, are absolutely range-bound right now. You can see this is our current print as we look at the market, trading anywhere between 1576 and 1578. I want to really take a look at the fact that when we see these cycles in terms of our peaks, our valleys here, and then our peaks stagnated for a little while, look at this low we hit intraday, almost to 1560. But I do believe that we have good support in that area. Following that 240-minute chart, so over the last 8 hours of trading, you can see it did find support in this area. It did come well off of the lows. We have that doji now, and we've gone green on the shorter term chart. When we convert our 240, I've turned it into a 480, so I've basically halved the size of the bars. You can see that we've gotten this very, very thin trading. It's opening and closing at about the same range. There is that low, and we've not gone green even on these hourlies, not quite daily yet, but you can see we haven't gone green here. It is still lagging behind these short-term charts. We'll have to see if there's any kind of follow-through. One thing I can say is that what we have witnessed lately is the dollar has really become the leader, and the precious metals, specifically gold, seem to be following and going where gold, or the dollar isn't going, excuse me. They're not exactly overlaid, but they're very, very close. As you can see, I've put up a dollar index chart alongside of a gold chart, both daily, and really what you can see more than anything else is that this is that record top. 1920 happens around September of last year. From there on, you can see it's a series of peaks and valleys, but it moves from 1920 all the way back down to these support levels here, which are 1520 here, back to about 1800, and then back to the support level. So you can see that we have pretty much seen this market, although there's been waves throughout, as you can see, but it has been on this slow, steady decline. In the same way, when we look at the dollar, you can see that the dollar was gaining strength and gold was gaining strength. You can see that it weakened through the first part of this year, a little bit on the sideways, but it's really gone up and away as we've witnessed the gold market really come down. You can see it very, very easily when we put these charts together side by side. You know, when we take a look at our daily chart, this, of course, is in Henkinashi format, cash market. It has some Fibonacci retracement areas as well as an Elliott wave count. We are still within the guidelines, though. As you can see, even this sell-off recently, even down by the lows, they have not hit this bottom support target or area. And so for at least the time being, even with the weakness in the market, I do see this congestion pattern continuing. I see a very, very tight range, but I personally think that it will probably stay within the confines of this compression triangle until it breaks one way or the other. And the reason I say one way or the other is in a classic or traditional Elliott wave count, we would look for 5 legs in the thrust up. However, the way it's reacted in this area and this continuation of lower highs in the market has prompted me to think that rather than a 5-leg count, we might simply get an A, B, and then a standard zigzag C, and the C would take us, of course, could take us as low as maybe 1482, this 50% retracement. That's what I would look for as a bottom target if it does break through this critical support area. Traders, lastly, let's take a look at silver. This is a daily continuous COMEX contract. The one thing that seems apparent, like in gold, we've got a trading range that continues to narrow. Obviously, very good support at $26. We've got confirmation when we look at this triple bottom. At the same time, we see very, very strong resistance just above $28. You can witness this between 28 and 29 right in here. But what you can really see is this range continues to shrink as we get deeper and deeper into the summer. Expect a narrow trading range, but expect the unexpected in the precious metals markets. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.